Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, September 30th, 2022. So I'm just finished recording the premium video for the good folks in the Gold Room, and we took a look at a couple different things. We looked at the SPY, the QQQ, the IWM, we looked at VIX, we looked at the dollar, we looked at high yield bonds. I'll show a couple of things that we looked at together with you guys as well. But I think we're kind of entering somewhat of a binary moment in time. So let's start here with the SPY, and we'll kind of set the stage here with the SPY, and then we'll move on to some peripheral stuff that I think is really important, that I think will drive trade. So first up here on the SPY, you have the weekly and the daily. Weekly on the left, daily on the right, and you can see here that you have this kind of double bottom low, and you actually close below it. Right? And you close below it on increasing higher and higher volume for the last 3 weeks, with this week being the highest volume. Not only that, but you closed at the daily low, you closed at the weekly low, you closed at the monthly low, and because it's the end of the quarter, you guessed it, you closed at the quarterly low. So this is the first time since 2008 that we've had 3 quarters down consecutively. So the video is going to be titled something along those lines because that's what I think is going to happen next. Now, I do need to kind of quantify that because the path getting there is also important, right? I can't just tell you it's the end of the world, but not give you a map in terms of how to navigate that. So this weekend, there is certainly a vibe in the air. And a vibe in the air is not something that I can show you on a chart. It's just something that I have from experience, and I am completely and totally open to being wrong about this. And I'm not positioned for it. So, mind you, I'm actually positioned a little bit short, tiny bit short Amazon. So I'm not positioned for this. But really the only thing that I think that could save the market at this point, having closed below this key support level here, right? These two green lines that I'm kind of highlighting here, that's the previous lows as well as a voodoo line, right? A very important support level that we have in house. Having closed below that now, especially on increasing volume, there's not much of any type of actual support under the market. So where's the support in this market? Well, let's take a look here on the weekly chart. And the support in this market is going to be exactly where I've been telling you since March of this year. If you for those of you that remember that YouTube video where I said it's going to 340, that's your support, right? Structurally speaking, that's your support level. Now, mind you, there's a support level here as well, but you see below that red line and above this blue line, there's a pocket of air, right? And in the event that they don't have some type of intervention this weekend, so to finish the thought, this reminds me of 2008, and the reason I say that there's like a vibe in the air is because this is a critical point for the markets, right? If we start to take out some of these levels and we go down to that 340 level, then it becomes really almost systemic at that point. It becomes almost dangerous to the entire system. And what I remember from trading in 2008 is that at critical moments like this, the powers that be, meaning the central banks and so on, will over the weekend try to organize something so that they can surprise the markets on Monday and get them to turn. So going into next week, that vibe is in the air of some level of intervention because of the central banks. And in the event that they don't intervene, I think we fall and we continue to fall until they do intervene. There isn't really anything in this chart that's going to suggest that we would not turn or that we should turn higher, because if you look at the indicators here, you have this double bottom low that's been broken. You did close technically below the 200, which isn't a huge deal, but it's not great. You did it on bigger volume, and you see how, before we even look at the squeeze, you see how this is in a bear orientation. You have the red line on top of the green, and the green is below 50. That's not good. That's bearish on its own. But then you have this pressure to the downside as well, and this hasn't hooked, right? Like back here it hooked. You don't have any type of hook here, right? So these two signals alone are enough to say that this is really bearish, but then you add in the kicker that the squeeze is flat, right? Flat meaning that the histogram is not, the histogram hasn't gone down and then hooked. Like what you want to see is this little hook. See how it hooks here from red to yellow? It hooks. Here, when it's flat, basically what it looks like is something like this, right? Like it looks like you're about to get expansion. So it looks like it's going to start coming down, which would be downward pressure, before it could hook later on. So this combination of signals here is just pretty much as bad as it could possibly be. So that's why, I'm kind of telling you that next week needs to start at some point with an intervention of some kind. Similar to what they tried to do this Wednesday with the BOE, but it needs to be a much larger scale and much more in your face, and it needs to involve the Fed. And if it doesn't happen Monday, then the markets probably will fall, continue to fall, like a child throwing a tantrum until the powers that be intervene. So let me show you a couple things here, because the question is like, well, how low is low? And I've given you a target of 340, and I stick to that, but there are signs that this is going to get much worse. And now I don't want to tell you this to scare you. Like I have nothing to sell you, right? I'm not selling you crash insurance. I don't have a book. I don't have a webinar for you to attend. I have nothing to sell you, right? But I do think I know it's my job actually to at least give you my opinion based on what I see in the charts. So let me go to HYG. The baddest of the bad, the worst of the worst. So HYG here. For those of you that are unfamiliar, HYG is just basically junk bonds, right? Now, why do we care about junk bonds? We care about junk bonds because they move way before the rest of the market will move. So oftentimes they will give us a clue as to what direction the market wants to move. So keep in mind, I just showed you the SPY. The SPY has the same double bottom as HYG does, right there across that blue line, but the SPY was right here. Right, it had just breached its double bottom lows. You see how this guy has closed now below its double bottom lows for 2 weeks in a row? So essentially the HYG is 1 week ahead of the SPY. So that implies that the SPY will go lower. Now, here's the thing, and this is the scary story part of the equation. This is your COVID lows for HYG. So it would be right here at this green line, right? You do have a support level here at 71, but if you get through 71, guys, the trade that I think is the best trade is if you get through 71 on HYG, you short anything you want. Personally, I would short, I am short Amazon. I would add more. You could short the Qs, you could short the SPY, you can short the IWM. You could, in my opinion, you can short indiscriminately once HYG gets through 71, and you wouldn't cover it until it gets to about 69. Right, so hopefully that makes sense. I'm using HYG as the trigger for everything else. I already know the SPY is a short. Telling you that the SPY is a short is not breaking news, right? You're not here to hear that because you know that. You don't need me for that. But using the HYG as the trigger to trigger in the SPY or the Q short makes a lot of sense to me. Here's the second half of the scary story. So here you can see there's a gap between where we are and the COVID lows. In my opinion, that's going to get filled. In my opinion, the SPY and the QQQ and the IWM and everything else is going to look like this by the time it's all said and done. But there's actually something that's leading even the HYG, in my opinion. And it's right over here. It's the tip. So the tip is inflation-protected bonds, right? Inflation-protected bonds. Here's your COVID lows. Look where you are now. So the reason I tell you this is a scary story, and hopefully you're putting together everything I'm dropping on you. The SPY is the best looking thing that we've looked at. Now the SPY looks like garbage, right? But it's the best looking thing that we've looked at. Below that, 1 week ahead of the SPY is the HYG. It looks worse, and it's also 1 week ahead. About 3 weeks ahead of the HYG, therefore about a month ahead of the SPY, is the tip, which is what I'm showing you now. So this is where the rubber meets the road. In the event, it's already happened. In the event that I'm even partially correct about this, the tip here being below the COVID lows implies that the SPY could theoretically retest those lows as well. So even though my target for you was 3,400 and I stick to that, we'll have to keep revising that because there is a really, really nasty scenario here that's in the cards that would play out to the COVID lows. Now, for that, you really need something to blow up big. But hopefully you can understand what I'm showing you in the charts and how each one is kind of leading the next. And hopefully that all makes sense. So going into next week, guys, if you don't get the intervention Monday, I see no reason for the market not to continue to fall. I think the market will continue to fall unless the narrative changes, meaning that they intervene, meaning that BOE or the UK government kicks out Liz Truss, or we have some kind of war agreement, or the Fed just decides, hey, we'll start printing again. One of those three things needs to happen. And if none of those three things happens this weekend, markets fall, and they continue to fall until one of those three things happens. From a trigger trading entry perspective, understand the dynamic run HYG and just keep it up on your charts. Keep it up somewhere on your charts. And if HYG starts to break that 71 support level, what I'm going to do is just have HYG up on my charts. If it breaks 71, I go out there and I short more Amazon. I short the SPY. I short the SPX. I do it indiscriminately. And I look to play it back to about 340 SPY or about 3400 SPX. All right, guys, that's my time. Certainly don't want to give you guys a downer on a Friday, right? I try to bring you bad news in a cheerful way, somewhat. But it would not be kosher of me to not, to give you false hope or to tell you that things are bullish when, they're clearly not. So just wanted to show you guys kind of the things that I'm looking at on the charts. And then also so you can understand if I'm wrong, right? If HYG starts to go up next week, that certainly bodes well. If TIP starts to go up next week, that certainly bodes well. And if you get intervention this weekend, that certainly bodes well, at least for a day or two. So those are all the pieces, guys. Hopefully that helps you put them together. If you have any questions, drop them down in the chat. And aside from that, thanks for checking us out this week. Appreciate you guys being here. Be sure to leave us a like before you go somewhere else on the YouTube. Leave us a comment as well, just because it'll help us bless the algorithm and allow more people to see our content. And I hope you guys have a great weekend, and I'll catch you next Friday. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.